I'm going to guarantee you that at the end of this video, you are going to see something that something new, something you've not probably you've not heard before, or you've been missing out, or you're going to see it in a different light. So if you've been watching my other videos, you notice I always talk about following the trend, because they say the trend is your friend. So when you decide to go against the trend becomes your enemy, right? So focus is going to be on boom and crash, strictly boom and crash, and I will just go straight to it, right? So I won't waste your time on talking stories that are not really important to our class. So when trading boom and crash, or any financial instrument for that matter, one thing that is key, there are things that are key that you should look out for. Those things, they are consistent, they don't change, guys, they don't change. It's irrespective of the indicators you use. Now what I'm focusing on is price action. Actually, I'm talking about price action. Indicators are just secondary options to your trading. Why? Because they lag. So indicators are supposed to complement your existing price action strategy. So using an indicator without understanding market psychology or understanding price action, you're going to find yourself getting into wrong trades, and a fake out will happen, and you can't even tell a fake out from a re-entry, right? So indicators should be your secondary option. On my chart right here, there are only two indicators. You're going to see indicator more on 1 hour. You have let me just state it out. You have these three moving averages. They are clustered together, and in the settings you see moving average 233, shift 3, exponential period, and apply to high. And in the middle one you find the same thing, apply to medium price, and the last one the same thing, apply to low. So what this indicator does, I'm going to explain it in a bit, because it's not useful on the higher time frame. It's much better on the lower time frame. Then on your 1 hour, another indicator appears and joins this one. This is a moving average 21, method exponential, apply to close, shift 1, and I'm going to tell you how this thing works. But before I do that, I want to talk about very important things, because if I don't tell you how this price action works, the indicator will be of no use to you. So let us go. So when trading boom and crash, one of the first things you want to do, or any financial instrument, like I said before, is you want to first identify the dominant trend. And when I mean the dominant trend, I'm talking about the more recent dominant trend, not just dominant trend that have been around for a long time. Okay, if you can, when you look at this chart, you can see that there was a long trend here on the bearish side. On the bearish side, there's a long trend here, right? So what you're looking out for right now, you're not looking out for this one, this trend. Let me map that out for you. This is not what you're looking out for. You're looking out for the recent dominant trend, and based on our price action, we can see that the more recent dominant trend is right here. You can see it right here. It's pretty clear, very obvious, right? And this is a daily time frame. So on a lower time frame, this is going to be a very huge move. It's looking really small here, but on a lower time frame, let's say on our 1 hour, let's just check it anyway, so that you see what I'm talking about. So you can see you can see the big move, really huge, really huge. So now that has been established, you look at the you want to find the dominant trend. So when you find the dominant trend, you now know that okay, the dominant trend is on a buy side, right? You have no business selling, because when you're selling, you are not against the trend, and it's going to be your enemy. This way you have to start seeing stop outs. You take out the stop losses, and you looks like the broker is always after you. So now you know the dominant trend. You're not looking out for buy opportunity. So what do you now do? You the next thing you're going to do is you're waiting for the markets to retrace, and it gets to a zone, then you look out for buy opportunity. So now those zones it's going to get to is what we are going to call the key level zones. They are key level zones because those zones you are going to find multiple support and resistance levels, more like a confluence. That's what they call it. Those are your key levels. Those are the areas you'll be looking out for your buy. So I'm going to change this to a line chart, and let's see if we can spot our key levels. Sometimes you do not find key levels on your daily. You can go check on your 4 hours for key levels. So now I'm going to change this to 4 hours because I'm going to work on the past trend more like that has already existed. So on our 4 hours, you can see that of course the market is on the bullish side. So I'm going to take it from here, where the market started to retrace. Okay, I've not even brought out the big boys yet. So right here you can see a key level right here. Here's a key level, and you can also map this place out as well as key level, just in case price gets to that area. I've talked about why those areas are key levels in one of my videos. If you click, you will see how to identify key levels. So I don't want to waste too much time. I won't talk about that again. You can go watch the video and you see how to identify key levels. So now we know these are key level. We are looking out for markets to retrace back to that level. And one of the issues, one of the challenges, I won't say challenge, it's not a challenge, it's the problem with traders who are impatient. They are not disciplined. You should wait, guys. Wait for price to retrace. Wait, you will not die. Nothing will happen to you. Wait for price to retrace back into this zone. At this zone, you are now looking out for buy opportunities. It's as simple as that. This is what I just did now, was market top down analysis. I have another video on market top down analysis. You can check that as well. So now price has gotten to this zone. You're now like, okay, price is here. What will I do? I'm looking out for buy opportunities. So before I go to the lower time frame, let me mention something before I forget. You know, if you're trading forex, you find that this is a good entry, because here you find an engulfing candle on the zone you're expecting. On the key level zone is an engulfing candle that created a demand zone. You know, for a forex market, what will happen is you see price will retrace back, you know, have a little pullback into the demand zone before it buys up. But this is boom and crash. You just went all the way. So just to mention that. So now what we're going to do is we are going to a lower time frame, and on the lower time frame, which is the market of the analysis, what I'm looking out for, I'm looking out for engulfing candles. If I find one, if I don't find one, I'm looking out for structural formations and breakouts. That's two. I've mentioned two things. One, I'm looking out for engulfing candles that engulf a candle from that zone, which created a demand zone. Two, I'm looking out for structural formations and breakouts. Then the third one I'm going to talk about, actually there are 2 in 1, you can call it 3 and 4, is on your lower time frame. Now I talked about, as I was going to tell you what this 3 moving averages line are for. Let me take out something so that this will be really clear for you. This 3 moving averages line, they are called, the nickname for it is home base. The way it works is when price is below the 3 moving average line, you know, for the dominant trend, bullish dominant trend, when price goes below those 3 moving average line, you'll be looking out for a buy. And when price then on a bearish trend, on a dominant bearish trend, when price retraces and goes above the 3 moving average, you'll be looking out for sell. Don't worry, I'll explain that in case you don't understand, but let me just deal with this. So I'm going to mark this place out, our zone, and I'll go to 1 hour. Sometimes you can even go as low as 30 or 15 minutes, because you are just looking out for you know, structural pattern and formation. So in this 1 hour, like I said, there's a structure here. There's the breakout. This is a trend line breakout. I also talked about the trend line breakout in one of my videos. You can go watch that as well. So this is a trend line breakout. You can see a trend line breakout right here. And to complement your trend line, you want to add another horizontal line on a key level here. You can see I talked about key levels. I'm not going to do that here. No. Already at 9 minutes. I've not talked about crash. So you can see how price broke through our horizontal line and broke through our what do they call, our trend line. If I change this back to, when I change it back to candlesticks, you can see that, right? Then also you can see that price is below our home base, our 3 moving average. Then finally price broke through with a huge candle above our moving average 21, the yellow line. Shift 1, period 21, exponential, apply to close. So you can see how you trade boom and crash. I think this is pretty easy if you are just willing to wait for price, you know, to behave itself before you commit into placing a trade. Then next question is, oh, okay, now I'm not in the trade. When do I leave? Where do I place my stop loss? It's really simple. Place your stop loss below, you know, support, which is going to be around right here. Okay, let me use something else to do that. support to be right here, you know, around this zone, just below your support, you know. Then your take profit should be the next available resistance, which is here. Taking your profit here isn't bad. It's going to be around, from where you entered, it's going to be around 20 hours. With good lot size, you make good money. Then also, if you want to stay longer in the market, you can use your Fibonacci to look out to take your profit at a reversal zone as well, which is 161, 141, 127, and you can exit the market right about here. So guys, that's how to deal with it. So I'm going straight to crash so that we will be able to chart something. Okay, crash, you can see that on the crash market, the market is on a bearish trend, right, on a daily chart. So I'll switch to my 4 hours. I'm looking at for sell opportunities as well on crash. So look out for key levels. Okay, you can see the market bearish trend and retracements. Key levels should be around, you know, here. Talked about key levels before, and you can see map out here as key levels, just in case. As you can see, to map that key levels, you take your Fibonacci. Guys, I think I forgot to draw Fibonacci on from 500. I'll do that. So this is a Fibonacci. Draw from your top to the bottom, and you can see where price rallied here. At this point, you're looking out for, you know, like I said, you go to a lower time frame, looking out for engulfing patterns, structural formations. 1 hour as well, you can see our pattern is being formed. There's a consolidation here, and there is an engulfing candle on 4 hours. I think, yes. Is there one? Okay, there's really no engulfing candle here. I don't know why, but like I said, looking out for engulfing candle, chart pattern formation, breakout on moving average 21. So one of them must happen. So right now, price is on a bearish trend, and price now is above our home base, our 3 moving average line. You can see that, right? Okay, let me take this in now so that you see clearly. It's clear now, right? Okay, so you can see the structure formation right here, and on the break of structure, price starts to fall. Structural formation breakout here, that's one. Then also below our moving average 21, above the home base, and there you go. Where do you take your profits? You know, it's going to be, you can take a profit right here on the key level zone, or you can as well draw your fib and take a profit at the reversal zone. So it's all the same for any financial instrument. So like I said, I forgot to draw my fib here. I really need to see how the fib does right here so that you will know. Okay, so I'll draw my Fibonacci from here to here. As you can see, price was exactly at Fibonacci 61.8 retracement zone right here. So you see, guys, we are still on the good side. So this is how to trade boom and crash. Do well to subscribe and do well to like. When you see a content that inspired you, do well to like and subscribe. It will help you create more content and reach out to more people as you like. Also do well to comment and share on areas that are not clear, so that I can make things clearer in my next video. So I'll see you guys in my next video. Do well to check other videos as well. Peace.